And basically, I'm showing the 560 call. It's options expiration. There is a gap, and here is a crap. And SMF Pro traders are learning that there's a wide bid and ask between the call, okay, and that the MACD is going down right here. And basically, let me get the chart where you can see it. And we hit another green bar. So there's your gap. Here's yesterday's bar. Basically, what they're going to do is that what I want people to know is that the option went to 996. And this is an options expiration, and we're going to get the better pricing down here, and we have a green bar here. We let somebody take a trade there, but we only let them do one contract based on that first green bar. But the thing about it is, these indicators down here, this has got to stop falling. This this MACD is going, it's got to stop going. And that's a doji 3 minute. And so we've got orders at 640, but we're going to put a bottom in here. We came down and we filled that in, and that's a buy. And this is a buy signal where there's a wide bid and ask spread. So now, Ray, if you want to go one contract at 770, you would go 770 here. And you'd put one contract and see if they'll throw off to you, like they did yesterday. And do it for 3 seconds only. But I want people to know, somebody bought 760 contracts at $7.90. If you take 790 times 760, that's how much money that trade was. The reason why the bid side drops a lot lower than the ask is that way what they try to do is trigger people to throw off to them at the lower price, just as the SMF Pro Trader is being taught. But you don't do it when it's only 20 pennies wide between the bid and the ask. What you like to do is throw that one contract out there when there's 40, 50, 60 cents wide, and if they throw off to you, that's fine. We got other bids out at $6.40. And basically, this is the 560 call, and this was the gap. This was fading back. We have not gone into a 3-minute sell signal, okay? And basically, we're taking a little bit of risk, but we didn't pay $9.96. $7.70 and $9.96 is $2 less. So $2 of the risk entry has been taken out of the trade, and the SMF Pro Trader owns it 20 pennies above that low. And when I go back and take a look at that, there was only 2 contracts traded at 750. This is not an equity. This is an option called 560 call, and the art of being a market maker and what that's about and how that works. And then using the 3-minute chart and getting that wholesale entry on a very small degree of risk for new SMF Pro traders to learn how to do that in an options expiration. And then getting the ask over here to throw off to you. But then again, volume entry risk management. Volume entry risk management. We had trader and everyone followed him. So it was 40. And they did. And they will. So go 820 now. Count to 3 and come off. Okay. Go back again to 820. Count to 3 and then come off. Okay. Go back and make them feel that they got to sell it to you. That's what he's trying to do, is entice them to throw up, and he just got hit. Okay. Well, hey, what happened there is when he drops the ask, you don't go back out again. Okay, Mr. Plain? So it was 840, 830, well, 840 and or 850 was up above, but if they drop the ask here, no, then you drop it over here. You don't stop. I mean, look, he did okay. Okay, he's got 3 at 640. And believe me, it's all about that buy signal of that 3 minute. See, when you're buying an equity, it's quite different than the option, because when you're buying the Pro Trader bar, and he's got a Pro Trader bar, which will become half of that bar, and he's sitting right there, and now it's a double bar. But when you're buying that bar with the option, it's a little bit different. Okay? When you're buying the option, your job here is that, see, it's 30 cents wide. He won't be buying anymore unless it's at 640. Okay? Because he won't. And the thing about it is that was an institutional buyer, so I'm sure he's got some kind of connection down there to walk the dog on that 760 contracts. Okay? That's what his risk is. Our risk is 1 and 2 contracts. But that was an institutional buyer on the ask. And believe me, that their money is that something's going to happen. Okay? If he makes $1, he makes 760 grand. No. You follow your 3-minute chart now. Okay? That's what you follow. Say, don't follow stupidity. What do you? Is a chart stupid? It don't have no stupidity. It don't even have a mind, does it? What it is, it's the behavior of a market maker and a bunch of people engaging in a 3-minute. Now, wait for the turns. Watch the CCI. You people aren't watching these indicators enough. You haven't learned. Well, it's got to go lower than the last bar. That's what you were taught, Steve. And when that 3-minute bar is over, it's got to go lower than that one. Why don't you write that down? And, all right, have someone explain it to you. Obviously, you're not watching the tapes that I put out on it. It's got to go lower than the last bar. So, there it is. The previous bar was 37. Now this is 19. It's not over with until the 3-minute zone is over. But it's got to be lower. And so does the MACD. Okay, and you need to write this shit down. It's principle. Write it down so that you don't. Well, I just told you. That's the previous bar. That number's got to go lower. This bar here was 24.1. Now it's 27. It's higher than the previous 3-minute bar. And the 3-minute bar is not final yet until it's over. You do. And I knew that you would easily enough. So you have, huh? Good morning. No. If you want to take out, if you want the better risk-reward ratio, it's like in the indicators. How do you get in before the turn? And if you want to take the risk out, you could wait for it to hit positive but what they're doing is that until it does go positive, they're only buying a single contract. They're not buying 10 contracts. So just like when I buy down here yesterday at the bottom of the indicator and it starts to work up, I'm ahead before it got into the buy signal. You hear me? And your entry, and good question that he asked, your entry volume management would have to be very light. Okay? Because the trade in itself will have its turning point. The problem that we have in this particular trade is there's no volume. and the bids are going to drop lower, but the pro trader, sir,